Shein is 15% of global fast fashion.
In 2024, it added the entire revenue of 2021.
Okay, manufacturing is going to happen in India. We know that low cost is probably the biggest lever here. Will they be able to achieve that low cost manufacturing in India is the question.
That's the Nykaa story. I think growth is there, profitability is in the right direction, but significant headwinds in terms of competition, capex, weights, and private label growth. The interesting thing about Delhivery is they are sitting on almost 5,500 crores of cash.
WeWork filing for an IPO, and I'm sure everybody has followed the journals of WeWork in the US. So almost 10% of the Indian real estate market, which is about 1 billion square feet, is now flex spaces. Actually, बता रहा हूँ मैं ट्वीट कर दे ब्रायन जॉनसन को.
नहीं यार,
अरे स्क्रीनशॉट भेज दे बस कि ब्रायन थैंक यू फॉर विजिटिंग इंडिया, योर कंट्रीब्यूशन टू माय लाइफ, एंड ऐसे डाल दे.
और ये भी लिख दियो मैं जहाँ रहता हूँ वहाँ AQI 300 है.
Hey everyone, welcome to episode 14 of Asymmetric Podcast. Clearly, me making the introduction last time worked. The retention was through the roof. Data shows that all of you like me making the introduction much more than Shantanu. So I'm going to keep trying to do it. As long as the retention holds, I think I have this job. So please at least watch the first 10 minutes. Otherwise, I'm going to be out of a job. And Chirag, maybe I have to do the introduction. If that also drops, I guess we need to shut down the podcast itself. But I hope it won't come to that, because we heard you, a lot of you, I think 4 or 5 comments that guys, don't mind the low number of views, we love the podcast, so don't worry. This is our passion project, so we're going to continue doing this. As Paul Graham said, do things that don't scale, which is what we are doing today. And once, I'm assuming that we have all the feedback and we keep improving, I'm sure we'll find scale over time as well. But with that note, would want to welcome you all to this episode where we have a bunch of topics lined up, a lot of market feedback. I'm sure all of you are feeling the pain with the market correction. Everywhere we go, we only hear about the crazy 20% drops in speaks. Bangalore and Delhi seem to be a lot more silent. I think Bombay is very used to this, going up and down. But overall, we have a lot of startups that have gone IPO. Their results are out. We would love to discuss a few of them. We also have a couple of interesting data points on market re-entry of Shein alongside Jio. We also have an interesting update on the entire co-working space. WeWork is planning to IPO, and so are SmartWorks and IndiCube. AWFIS listed about 6 months back. Their results also came out. So we are trying to cover as many topics as possible. No guests this time. We actually reached out to quite a few folks. Unfortunately, as this podcast is getting popularity, most public company CEOs are bound by SEBI rules not to come in and talk about their businesses, unfortunately. So we'll continue to try and get as many private company CEOs and founders as possible. But we're going to do a little bit of a public market roundup, especially startups going public and their results in this episode. So on that note, Chirag, why don't you start off us for the first topic?
Interesting, looking at Shein entry into India in partnership with Reliance. I think it's a very interesting one from multiple angles. Right from fast fashion in India to a Chinese company now being allowed. And what does it mean for the overall sector, right? What does it mean for Shein globally? And what does it mean for the overall sector? But let me first take you through, I think, a little bit of why Shein is a special company. Fashion, unlike, or let's put it this way, that we have always discussed commerce in those 3 pillars, selection, pricing, and convenience. We know in fashion, it's very hard to do that, especially the convenience part in terms of delivering fast. Fashion by nature is a wide selection phenomena, right? And pricing has always been a little difficult because you have to manage for high inventory, seasonality, all of that stuff. I think what Shein has been able to crack is quite phenomenal, that they have been able to do these small batch productions, which come because of the way they are able to analyze customer trends. Just to give you example, they will have like click-through pay on product pages, and basis that they will analyze that, okay, what kind of ordering my supply chain should be doing. And there's this whole interesting, supply chain which moves around this whole piece of analyzing customer trends, doing micro batching orders, and then ensuring that supply chain delivers. They are 15% of global fast fashion. Shein is 15% of global fast fashion. Can you imagine? And fashion as an industry has always been fragmented. There is one company which has come in and taken 15% of the numbers. It's been a fantastic evolution of fast fashion. You look at the first generation companies, H&M, Zara's of the world, which took from these original runway to high street retailers. So they pick up those trends and started to make affordable prices. Then second generation companies came in form of digital first players such as ASOS, Misguided, etc. I think third generation is where ultra fast trend to production times and ultra low prices is what has happened. This is where Shein and Temu have really crazily scaled. Just talking of scale, look at these numbers. Shein is estimated that they're doing $50 billion of revenue and growing at 50% year on year. They're profitable, backed by Sequoia and General Atlantic. As I was saying, Shein has 15% market share of fast fashion globally. Right? This is insane. And you look at this graph in terms of revenue. How can, it is unheard of that a manufacturing fashion dominated company growing at this hockey stick type curve at this scale, where, look at 23 to 24 growth. 23 was almost 30 to 33 billion. 24 is $50 billion.
The interesting thing about this graph, CT, is just go back. In 2024, it added the entire revenue of 2021 in 1 year. The whole revenue was the growth.
It's been crazily growing. And, the interesting part is you look at some of these charts, which I was able to gather, look at their market share in the United States. A little dated chart, but look at the market share, how it has moved. Amongst these large players such as Zara, H&M, Fashion Nova, Forever 21, which was 18% in March 20, has become 50% in November 22. So Shein is 50% market share in fast fashion companies in US. It's a Chinese company.
H&M ki to low rakhi hai, H&M is where they've eaten from the most.
Look at this Shein sales by country. Can you imagine 30% of their sale? So they're doing $50 billion of sale. $15 billion of sale is coming from US. Isn't this crazy? I think why this is happening is, as I was sure, we were going back to that convenience and pricing levers. So you look at, they are able to offer the lowest prices because of their fantastic way of analyzing customer demand and then feeding into their supply chain and getting that to market. Range of products, they are super wide. I think what they've interestingly also done on top of these first, second gen companies like H&M, Zara were also doing some of this. I think they've gamified the shopping experience. They know how to leverage social media, which I think all Chinese companies know that really well. And how do you create social media buzz? How do you use influencers to your advantage? We are talking a lot more about Shein because they're entering India, but I think Temu is also in the similar zone where they're giving Sorry?
How big is Temu now?
I can check Temu.
3 billion. Around maybe 6-7 billion.
In terms of revenue. What I think is interesting.
No, hold on. Even Temu is in the 50 to 60 billion category. City.
Yeah, it's quite large.
How assuming it's already like 6 to 10 billion, but it's actually in the 55 to 60 billion category. Sorry, go ahead.
One, I think, interesting thing specific to US, what has happened is that in US, the law is that all exempted goods under $800 are exempted from import duties. The way Shein avoids this is they directly ship to the consumers from China. Now, and look at the loophole that Shein has paid $0 in import taxes, while traditional retailers are paying like millions of dollars. Like Gap is paying $700 million, H&M is paid $200+ million in taxes. So this is the de minimis exemption, which is the significant driver, it looks like, of Shein profitability. Now it's been plugged, by the way. It's been plugged. Now, as soon as the Trump has come in, he said that this will also attract import duty. What is interesting is, I think, not only, the timing of the entry, because they're facing headwinds in US, in EU for various other regulatory things. I think they have an upcoming IPO. And I think the model which they're trying to strike, which is unique to India, they were kind of asked in 5 years ago when India got into this war kind of a situation with China. There were some 48 apps which were banned along with Shein. And they're trying to figure out, or they have figured out a unique model wherein an Indian company Indian company will get them entry, and all the data regulations, etc., will reside in India. Right. So that's the largeness of Shein in terms of how they have globally made a huge dent in fast fashion. Now, what
You know
the
how they
news is
started,
that
right? You know
sorry,
how they started, right?
yeah,
You know how
tell
they
me
No,
more.
started?
no, man.
Shein
No,
actually
no.
started. The founder had an insight that wedding dresses were very expensive. People were ready to spend on them, and the date was decided well in advance. So you would know when your wedding was, maybe 6-9 months in advance. So he decided to make wedding dresses a super low price but high quality kind of offering, and he would get them made in China and shipped to the US. So something that would cost maybe $5,000 or $6,000, he started getting them done in 1/10 the price, and it took off. And then from wedding dresses, he went into other categories, and then it exploded. So what books was to Amazon, wedding dresses is to Shein.
Oh, wow.
Super sharp, super specific, and great because it kind of it's the ultimate opposite of fast fashion, right? Because the wedding dress is like something it's once ever, and you do it like months, sometimes a year in advance. So it's the slowest possible fashion category, but that is how it started. Amazing, it's an amazing story. Go ahead, lady. Sorry.
Yeah, I think I'm just mind boggled by the numbers in terms of, typically, if you ask me in fashion, one, there are segments, two, there are now countries, and they're able to like sell it across countries. It's quite phenomenal. I think coming to what's happening in India, so they have a deal with Reliance now, wherein Reliance is getting Shein back to India. And the at least details of the partnership are that all local operations, data compliance, warehousing, supply chain, logistics will be done by Reliance,
Even
retail and
manufacturing.
distribution network. Yeah, that's the interesting part. What they say is brand design and merchandising is Shein's role. Technology and supply chain integration is Shein's role, but my manufacturing is going to happen in India.
Very interesting. It's very similar to the automotive babies of the 90s, right? Where technology comes in from a Honda or a Suzuki, but everything else kind of gets made by a local partner.
I think it's quite interesting from many angles, and I think the way, at least the questions which come to my mind from a so what point of view is that what does it mean for the sector, where we have seen, this sector predominant or this companies predominantly appeals to Gen Z, fast fashion as a segment. We know that Zudio has just scaled rapidly. They are a very offline heavy strategy. It has worked beautifully. Now Shein will be predominantly online, right? Uh, and it will be much lower in terms of price from, let's say, Ajio, which is more premium branded. So if my sense is, I think there is space, and the more I recall the earlier 5 year back avatar of Shein, I think they really gave Myntra the run for money. Myntra had no answers, as far as I recollect. Myntra had no answers in terms of how do you fight them. So Reliance has got a great deal going. That's the ecosystem. I think the second part is, okay, manufacturing is going to happen in India. We know that low cost is probably the biggest lever here. Will they be able to achieve that low cost manufacturing in India is the question, came to my mind, that, okay, will that happen? And will they be actually able to do the low cost thing, which they've been able to do it in China? We have seen that in other products. We have not been able to do to that scale what China is able to do. We have seen that in electronic products, right? So, and also, another thing which comes to my mind is that while you can take those bare bone technology, let's say algorithms, but you need to fine tune them to India needs. If Shein team is not involved in that, then would they function in those manners, like really in terms of efficiency, efficacy? Would we, how will that influencer knowledge, would they really leverage in terms of getting reach, getting wider acceptability? How all of that is going to work out? So it's still not easy, but I think it's a good start for Reliance in terms of capturing more share in the fashion segment. By the way, just to India numbers, just to give India context also in terms of fast fashion, India is $85 billion is overall fashion retail, and 7.5% is fast fashion, which is expected to become 25-30% in next 5-7 years, and the industry is expected to go to 200 billion. So you can imagine that both percentages as well as the size is increasing. So, you're looking at a $50 billion of fast fashion in 5 years. So it's a large outcome, which is what Mr. Ambani is going after.
This fashion market size includes e-commerce, right? Like Myntra, Visho, etc. would be included.
Organized, yeah.
Do you think if you look at the way fast fashion is growing in India, and if you see the biggest USP for someone like Misho, which was low cost apparel item, it's largely apparel, right? From a GMV perspective, do you see fast fashion sort of? And I'm just thinking out, the size that you mentioned, like $50 billion ka, technically the brand hai, right? So there is H&M, Zara, etc.
I think what you are mentioning is an interesting point. Misho is unbranded section.
Correct. तो मैं बोल रहा हूँ ब्रांडेड फैशन में एज लॉन्ग एज इट्स लो कॉस्ट इट्स क्लियरली शोज दैट बहुत डेप्थ है करके. ऐसा नहीं है कि लोगों को अनब्रांडेड ही चाहिए करके. तो इफ यू आर एबल टू गिव low cost branded, and we have seen that with Zudio as well, how it's scaled in the last 3-4 years. Clearly there seems to be a lot of depth, and if Shein also makes a comeback and makes its mark, I'm just wondering if the second order effect is actually on low cost fashion retailers versus low cost fashion brands as much, because India doesn't have that much low cost fashion brands as such, if you ask me.
Yeah.
There are more retailers than brands, whereas this is...
So you are saying they are more likely to get disrupted?
Because my view is brands तो इतने बड़े है ही नहीं इंडिया में. If you think about it, from an apparel brand perspective, because most of it is premium or even mass, there's very little like low cost fashion, right? We have a few startups that have tried to build there and are doing okay. But unit economics in India is a big challenge because either the cost of manufacturing, as you said, is very low in China and we are not able to make it as low in India, or the marketing costs are still a little high. And what Shein has cracked is clearly the gamification and the social media virality, or maybe it's also even affiliates, right? All of those things put together, they've figured out a way to keep their marketing cost low and keep their engine, the velocity at which they are able to churn the inventory very, very, very high. None of the Indian fashion brands operate that way. And the low-cost fashion retailer, I'm just talking about someone like Misho, for example, don't take inventory risk. So their business models are very different. They realize that we can make profit at the bottom of the pyramid, but we should not take any inventory risk, etc. Right? So if you go back to that thought, I'm wondering if someone figures out a way to scale low-cost fashion in India, which could be Shein, could be someone else, or as you think 25% of the market, $50 billion का low-cost fashion बिकेगा. I think the real disruption could be for the low-cost fashion retailer more than the brand, because brands don't exist. सबके लिए upside ही है यहाँ से.
There are Indian players, by the way, which were funded. Like Numi is one which was funded on the Shein model only. I would say, not sure, but I think Snitch is also a little bit, although they serve only men. But it is, I might be wrong to quote them as fast fashion. But I think their supply chain expertise is similar, wherein they catch the trend and then they figure out manufacturing very quickly. They don't manufacture in bulk. And they've figured out low cost, low CAC mechanisms of acquiring customers. So there are companies, I think you look at it, the day it was announced, Trent stock went down by, I think, 10%. It came back again by 10% the day Nirmala Sitharaman announced that there is this tax benefit which is going to happen to the consumers, and big beneficiary is this fast fashion segment. So my sense is that, you are right that there is going to be, or the bar in terms of brand, which was, let's say, affordable above a certain category, is going down. Let's say a V-Mart, which is also a fast fashion, very mass. Those are the ones which also will see some kind of share moving there, and low-cost retailers. But what do you think about this from an India perspective? Let's say if this works, then, I think we are looking at this model, not only for Shein as a company, we possibly look at TikTok also, we possibly look at Temu also, because we clearly know that in spite of knowing there is gap in terms of India needs probably TikTok. It had massive adoption and we've not been able to build, right? Many people are trying, but if a similar JV or these kind of construct is now possible, I think it paves way for many such JVs to be formed from here.
Yeah, I agree. I think so. So I think Shein ka biggest advantage is number of styles that they're able to dish out, right? At the same inventory cost almost. The number is bizarre. It's 1 million styles per year. To give you a sense, like Zara is at 12 to 15,000 styles per year. So order of magnitude is like, almost whatever, 150 times. I can't even do the maths. It's that different. But the reason they're able to do it is because of manufacturing cost is lower. And that's the question. So I always wonder, right? With Reliance, it's always you always wonder where the strategic mindset is, because on one hand they're being super cost conservative across their retail. I think they cut 45,000 jobs last year at a group level. Even we are seeing it in Reliance Retail, super margin conscious. Uh, but on the other hand, with Shein, they're taking a huge bet, because I don't know how they will get the margins that are required for this kind of operation. It's not just a technology and brand thing that will help them create, a market share grab, because you cannot get that kind of price without the back end. So maybe they have a few tricks up their sleeve, but the big question for me is how are they going to marry their cost conservative strategic approach to a category where even like we'll discuss the Nykaa results. Clearly, fashion is still a bleeding category at an average level. So I don't know how they'll disrupt it.
And Nykaa, by the way, sells like quite premium fashion.
Yeah.
And I think
Yeah.
Shein also clearly, because it's low cost, you can't operate it subscale. At $50 billion also, they were looking at like $2 billion of profit. After doing all that import duty, tax evasion, if you apply that, now my sense is that 2 will become -2. So at that scale, you're looking at 4% tax, right? At that scale. Which is also questionable considering the import duty evasions and different regulatory scrutiny which is happening.
India में बनाओ, where again there'll be a 40
India में कैसे
50%.
बनाओ?
India में
So
कैसे
look
बनाओ?
at now from a point of view that India में manufacturing होने वाला है, and then the scale will not be, of course, of size of 50 billion. What are the chances that this looks like a healthy P&L
And
over time?
Reliance will have to fund it, na? So now Reliance is also answerable to shareholders on bottom line. So how much appetite will they have to fund something like this? It may also be, it may actually be one of these, because also now you cannot source from China that easily. So RM also from China will become a little difficult. So you have to get everything locally. I don't know whether this is a third generation vision hobby thing for the group.
Yeah, but I'm sure the group thinks 20 years in advance. Yeah, if you think about it that way, it's fair. But what else, Shantanu? You have a lot of results for us.
No, not a lot. I have a couple of results for you guys. I think the Shein story is a great segue to. So one is Nykaa, the other one is Delhivery. Both of them declared their Q3 FY25 results over the last few days. I think Nykaa, quick top headlines, right? Decent movement, but just want to kind of bring a slightly longer vision view back to this. I think listed in 2021, late 2021. So from a high listing price of around 400, it's kind of come down in mid 23, 24, and has kind of been languishing at that 150 to 170 mark over the last maybe year, or 5 quarters or so, right? So that's where it is. But if you look at this quarter, I think revenue up 25% YOY. EBITDA also has gone from a 5.5% to 6.2% of the revenue, which is great. To give you a sense of the top line, I think revenue from operations, around 90% plus comes from beauty, around 10% or so, slightly less than 10% comes from fashion. I think few things that still kind of hold them back. If you see the PBT to PAT drop, or the EBITDA to PAT drop, I think there's a much larger drop because of expansion in other countries, slight tax inefficiencies in GCC. Also, I think the number of stores now stand at 220 or 221 stores now. We've added 45 this year and 12 in the last quarter. So 4 or 5 stores a month, almost a store a week kind of speed. So capex goes up. So a lot of the depreciation investment in capex will kind of eat that delta between EBITDA to net profit. I think
One comment can I give here, Shantanu?
Yeah, of course.
I think one of the reasons for any offline retail or any company that has a lot of leasing assets is that as per Ind AS, the rental is generally shown below EBITDA. So just check this it may be a case where all the lease rentals of the stores that they have, all of that rent is below EBITDA because that gap is too stark. 100 crores a quarter clearly seems like all the lease rental for the store is below EBITDA. And it's very weird. I don't know why SEBI has asked. I think it makes sense from accounting standard for some reason, but it's just such a wrong thing, right? Like imagine for a like if you have EBOs, like if you had Bombay Shaving Company, 200 stores in malls, right? All of that rental you could show below EBITDA.
Yeah, so it becomes earnings before interest, tax, depreciation, amortization, and rent. EBITDA.
Yeah.
That's what it should be. No, I'll get this checked. That's a good point. I did not know about this, but that's very helpful. But yeah, I think people are still saying that YOY 17.5 to 26.4 crore profit after tax, still kind of much more dilutive compared to what the the listing promise was, and even what's been going on. But at least trajectory in the right direction. But I think I just wanted to get both of your point of view on a few things, right? I think because beauty remains a large part of the business, fashion is lagged, margins are weaker. I think there is going to be a competition sandwich here. In fashion, for example, Shein we've spoken about. I think the other thing is quick commerce is really picking up on beauty. I think they're really investing in the category. Customers who want beauty products are very happy to buy the same thing on Zepto or the Instamart or Blinkit or any of these guys. I think Nykaa's ability to turn around in 30 minutes to 60 minutes at a pin code level is still much lower. So there is that competition. The other one is at tier 2, tier 3. Purple is now between 1,500 to 2,000 crores of top line already. So how do you deal with that? How do you deal with a customer that suddenly has where the whole entire Nykaa promise, which was a very singular proposition, is now diluted because it's available elsewhere. So that's one. I think the second one is on the offline expansion, right? Very aggressive. And I can imagine that the offline expansion is also a strategic one because these become delivery hubs. So if you open a store and that store can kind of deliver within a 2-3 kilometer radius, so it kind of services in two ways. But capex load becomes a lot higher. Throughputs are difficult to sustain. So, marginal throughput per store from 220 to 500 will be very, very different from 0 to 200, right? So how do you actually make that work for you? And third is, I think the private labels have done decently, but it's still much lower than what one would have preferred. Like Purple, for example, is almost half their business comes from private labels, and they've kind of bought into it. But with Nykaa, for example, Dot and Key and K Beauty have done well, but Nykaa Cosmetics and some of their other private labels have kind of struggled to scale. And I'm not sure what kind of strategic. I was kind of looking at the analyst calls and some of that. I think the just overall management narrative on private labels is significantly lower. So I think that's the Nykaa story. I think growth is there, profitability is in the right direction, but significant headwinds in terms of competition, capex, weights, and private label growth.
I think the biggest point here, at least I would see, is quick commerce. I think Nykaa has to figure out a way to get orders delivered in 2 hours. I don't think they need to do 10 minutes. But as long as they can do it in 2 hours, because in the price selection, I think that framework, maybe we should have it watermarked and kept always on our. So if you go back to the e-commerce framework, they have the widest selection, which is why people still love shopping on Nykaa. They still have a lot of exclusive brands that are only on Nykaa, right? And people love to come for selection. But yes, there is a slight pain for, let's say, the large categories of maybe skincare, personal care, being available on QuickComm, which will have some leakage now happening. They have to plug the leakage before it gets too bad. And the way to plug that leakage is to maybe serve their customers instead of 2 days in 2 hours. And I don't think it's going to be a problem because now you have all the logistics companies and warehousing companies now setting up dark stores, enabling a lot of these vertical commerce and large D2C brands to deliver in 1 to 2 hours. So I think
there also I have a slight caveat. It's not as easy as one might imagine. We'll come to the delivery one also.
Even today, Nykaa uses third-party warehouses. It's not like they have their own warehouses. They use third-party warehouses and they have third-party last-mile logistics providers. So this is a function of like how Ecom Express, Delivery, Express Bs, etc. enabled the e-commerce wave in the last 15 years by giving the warehousing logistics service so that e-commerce could scale up. Because see, in the end, Amazon set up its own, Flipkart set up its own, but everybody else used these guys, right? And that's how Delivery became a large company, eCom Express became a large company, ExpressBees became a large company, and the Blue Darts and the rest also catered to them. But there were new companies that got formed to serve e-commerce. In my view, there will be a set of now new companies. Maybe Delivery will also do a good job, but maybe 2 or 3 new large companies will get formed because they will start solving for a 1 or 2 hour delivery, which will be helpful for large D2C brands, Nykaa, Purple, and all of these vertical e-commerce players as well, which still conform to broad principles where there is high AOV and limited SKUs. Like in the end, you can't do this for fashion. I don't know how Myntra is doing it. I would really love to understand it, but this really works well for a selection that Nykaa has, in my view, because they know the demand for broadly which type of SKU and which pin code, and they can sort of keep that stock at that.
No, I agree. I think the one advantage Nykaa would have is that the AOV per unit volume is much higher, right? Because compared to like say staples or vegetables or any other groceries. But the issue, unfortunately, Revant, is even with delivery, we'll come to that, is 2 hours. So the number which we were discussing was 60 to 65% of orders are same day or next day.
Next day.
So not a 65%, 55% is next day. So it's still lower. And delivery का इसमें ये है कि for a dark delivery hub to work at a break even level, you need between 800 to 1,000 orders per day. So right now they have Delivery, which is India's largest logistics company, is less than 50, and it's still like the analyst calls kind of show that it's lesser focus for them compared to some of their other service lines.
I don't disagree. All I'm saying is I think new companies will come, which on day 0 will get 1,000 orders a day just from Nykaa itself. So I'll tell you one detail that maybe not enough people will know, which is we ourselves are live with a partner in Delhi NCR. In 5 of their dark stores, we are doing 400 orders a day. So I am contributing 100 orders a day per dark store. So अगर उसका 1,000 break even point है, मेरे जैसे 8 और कंपनी, मतलब मेरे जैसे क्या, Nykaa उसको थोड़ा धंधा देगा, उसका हो जाएगा. So in fact, the core anchor clients for any enabler of 2-hour delivery or 1-hour delivery, anchor client is Nykaa, and Nykaa knows that. Nykaa knows that my business will be the anchor. It's almost like how you have an anchor tenant in a mall, right? Nykaa is going to be the anchor client for all of these folks. And they will bend over backwards for that business, and I think that will be a good thing. But yeah, I mean, we have to wait for that to get figured out. We don't know who's going to win there. Will it be Delivery? Will it be someone else?
Who are the new companies, Revant? Who are the new companies that you are keeping an eye out on? Like, this is a very interesting one.
So there's one of them is Pick and Dell, one of them is Quick, one of them is Blitz. A lot of these young startups are trying this. Hopefully, some VC will take a bold bet, and I have spoken to quite a few VCs as to why are they not taking a bet in this space, and they feel the TAM is limited. But I disagree. I think there is a massive TAM that will get unlocked, and we are always wrong on TAM.
Second order effect है इसमें. We have discussed this, that more likelihood this logistics is going to have a lot more fragmentation from here, not the 3 large players. There's going to be these at least 3 more, or maybe 4 or 5 more regional players coming in. And then over time, of course, there will be consolidation, but looks like medium term, we'll have more players vying for this pie. And it will definitely, what we have seen is that as soon as you plug in this same day, next day, or like 2-hour delivery, the order volumes do go up.
Also, by the way, Revant, I must remind you that I don't have any food around me. Revant मेरे को मैसेज करके बोलता, तूने 6 खजूर के बीज थूके थे अपने पूरे एपिसोड में. तो फिर मैंने आज I only have a bottle of water. Just to remind all our viewers that Revant has a problem with my eating.
I don't have a problem with your eating. It was just that it almost seemed like you were having breakfast, and incidentally breakfast you wanted company, so you said, "Chalo, let me join this podcast." खाते मैं कुछ बात कर लूँगा करके.
I was eating slowly just to like kind of not had like a plate of fruits. It well in line with our health and wellness thing. It is, in interest of time, I'll quickly cover the delivery section also.
But then I had a question on QuickComm. I've maybe missed. I don't know if you've covered this, but China is also very dense, right? वहाँ भी नहीं ये pick up हुआ है क्या? वहाँ भी तो या वहाँ labor cost अब इतना ज़्यादा हो गया कि they are not getting, because I've seen a lot of videos where there are like delivery bikes in like line.
They don't have it by the name of quick commerce. It's something else, a fast fulfillment something. But they have like 15-minute delivery.
And it's now on the rage there also, I'm assuming.
I think China में तो सब 5 साल पहले ही हो जाता है. वर्ल्ड में जब आती हैं चीजें. you can imagine this would have also happened, in when Alibaba and these Pinduoduos was booming.
No, I don't think itna hua hai because when
We
QuickComm
have
was
not
not
heard
getting...
a lot about it. Yeah,
नहीं,
maybe
मेरे
there
को
are
यार
no
standard
new
जो होता है ना...
formation of companies there. Why we have also not heard is that it's not a market share move which has happened.
Yeah, quick commerce का biggest anchor I think is grocery and staples that you cook in the kitchen. That is where a household I think
वहाँ
anchors.
खाना ज़्यादा है. They order out. They order it.
They order out a lot
They don't
more.
make...
So वहाँ पे ये
Yeah.
use case नहीं होगा मेरे साथ में.
Yeah. और नहीं होगा
That's
चिराग
an
because मेरे
interesting
हिसाब...
point. So you are saying it's the food delivery and quick commerce kind of work anti-force है?
Yes. I actually, ये मेरा एक hypothesis है कि one of the reasons the food delivery business is slowing down a little is also the fact that if I can get all I need, and at least the cities where quick commerce is heavy is the top 6 cities where you have maids and cooks, right? There is no reason for me to order in when I can get everything and get it done. So मेरे view में at least the top tier will actually start eating out less or will not order in because they can eat healthier and eat more tastier food, which can be done at home itself. Because you can get the meat, you can get the grocery, you can get killer masala to marinate the chicken. Everything is done so quickly, right? So I'm just saying कि मेरा ये एक hypothesis है कि थोड़ा सा antithesis तो है इसमें.
Quite
I think वहाँ पे use
interesting.
case अलग होंगे. I think दवाई का use case होगा. But then without grocery and staples in the kitchen, ना quick commerce का value add becomes very very limited very quickly. So that's the hook.
Highest frequency is that only.
Yeah.
और वहाँ पे है नहीं इतना.
Frequency and also need for quickness.
Yeah.
Other things you don't need it genuinely that quickly because it's coming, it's great, but it's not like you need it.
Yeah.
Grocery and
They're
staples
making
you
it
need.
more want. Yeah.
Yeah. Okay, anyways, coming to delivery, I think another story of promise yet to be fulfilled. I think, again, you see this from the time it was listed 3 years back to now. I think there is significant value erosion over the last, I think been kind of stagnant over the last maybe 2 years or so, 7 to 8 quarters. And again, current market is what it is. But still, 20 to 23,000 crore market cap company. But some interesting things, right? I think if you look at their revenue growth, YOY 8%, quarter on quarter 9%. I think express parcel revenue has remained stagnant, but their part truckload revenue has gone up by almost 22%. And that used to be a concern before from a tonnage standpoint also. But I think the good part about delivery is I think across service lines, they have been able to kind of, I know this is slightly dense chart, but if I were to take your, I'll just guide you through this chart. This is probably an 11 quarter view on the revenue from services and a margin profile, right? So, the margin profile of express parcel, which is, probably 65% of the revenue, it's gone from 8.9% to a peak of 20.6% last year Q3 and down to 15.6%. So that's kind of been a little bit of a margin erosive situation. But part truckload, for example, has gone from a negative 43% and now 4 quarters back to back has kind of created margin. So I think management narrative also is that part truckload is where they see max growth. And overall, I think this is their 3rd quarter in a row of PAT positive, right? The interesting thing about delivery is they're sitting on almost 5,500 crores of cash. So out of 22,000 crores of market cap, 5,500 is almost cash. So which means stronger balance sheet, by far the largest logistics company in terms of also sitting in a good position in terms of investment in infrastructure and technology. So I think Sahil and the team have done kind of seen the market a little bit in advance and invested in warehousing, technology teams, etc. Another thing here is if you see their corporate overheads have remained static for 11 quarters, and this is despite the rupee going through what it is. Wages are exactly the same, 117 to 114. In fact, reduced a little bit. Marketing is low, technology is kind of low. So I think fixed costs genuinely, like they have kind of stayed true to the term and have kept it super fixed. So I think the whole story around efficiency, finding margins in different service lines, I think the story will play out. I think it's very clear now what the trajectory is, and they're probably the best position because this is a really difficult market, right? So consumption is softening, so clearly reflected in the slope of the growth. 2-hour delivery remains a smaller part, so I think that's still taking some time. But however, if you think about it, I think some of the other companies are bleeding. There are existential issues there. So this is a good opportunity for them to kind of think that in a high headwind market, they're still kind of remaining they're still kind of remaining profitable and are sitting on max cash. So I think now they don't need to necessarily, they're not dependent to raise from anyone. Externalities are lower. So I think now they might want to press their foot against the throat of competition and actually kind of take more share, but have to keep at it from a bottom line standpoint. I think some short-term pain will be there as marginal efficiency as they go into more pin codes and more service lines will continue to be painful. But I think if you were to bet on consumption and logistics being like a backbone of consumption, then I think delivery would be a good bet, but long way to go would be my sense.
And this is probably their best quarter, right? Because it's the festive quarter, right? So if I look at it from that point of view, and still, okay, express parcel margins, let's say compared to a Q3 of FY24, 20% versus 15%, gone back to the FY23 levels. Yeah. FY23 is 15.9.
Correct. So what has happened?
My sense is, I think two more players are.
CTA देखो आप अगर वो RTOs बढ़ गया. So for example, this yellow number is basically inclusive of RTOs, the number of shipments. So 233 has gone to 242, but of the additional 9 million, only 5 have been delivered. So the growth here has been.
You're saying 20 million RTO orders है?
20 million.
233 minus 22 million. No, 32 million, right?
32 million. 15%.
Against 36 million. And also, I think there is heightened competition in the segment because you have Ecom Express, which is expected to go IPO. We have Shadowfax, which is expected to go IPO. I think all of them are like looking to gain market share. And plus, another question which comes to my mind is that we are seeing...
balance sheet strength of some of the others is not as high as delivery, not even close, right? So,
but Shantanu, don't you think that, there is this, Zomato, Swiggy being listed companies are playing the game in a different way. In spite of being listed, they're playing the game in a venture way still, right? I think delivery maybe is sensing that the quick commerce piece from a delivery point of view is still not large. Hence, they are not doubling down. But shouldn't they also be doubling down? They have large cash. They don't need to go out and do a raise. Why leave an opportunity, when we are at least looking at from a D2C point of view or running Revant from running a brand point of view, is looking at there will be 3-4 new companies which will emerge. Why not, incubate something and like really go aggressive?
I think they are. I met the business head who's in charge of this. He's ex-Pepper Tap. They actually built out a QuickComm business. Sort of QuickComm business before this. I think they are serious. The only problem I see is in the narrative when the companies become very large. See, Shantanu, when you're saying that they have 50 dark stores doing 500 orders a day, it's not material enough for the delivery P&L, which is accurate and objective. But they are by far already the largest dark store enabler in the country with 50 stores. Because the second largest guy has 7 dark stores. Like I am working with smaller startups and telling them, bhai, tum 50 dark store dal do karke. But unless a VC funds them and gives them the capital to do that capex, they'll not be able to do it. So they are going store by store. They are putting one store, getting to 400, 500 orders, and then saying, now we'll put the next store, now we'll put the next store. So they are all capital constrained. This is a capital game. So I agree with Chirag, but I can see already them doing this because putting 50 dark stores without having the all the dark stores at break even clearly they seem to have the thought that we should go in aggressive on this, and they have a distinct advantage because they already deliver on a large network. Now I don't know how many of the top cities they are very prevalent with. Like we don't use delivery for our zone A, which is your metros, because they're expensive in metros. We used to use someone else. So, but I'm sure because they are one of the largest e-com delivery networks, they have enough data points on kahan kitna demand hai. Like, and therefore for them to know which lat long they need to service or where they need to put the dark store, they have the business intelligence to make the right decisions. And I think if they already have 50 dark stores, it's a matter of time before they have 100. And it will always look very small in comparison to the 20,000 pin codes that they will service. But give it 2 years and you will see the compounding differently. So I am at least happy to see 50 dark stores. I would love to see 100. We are just starting. We're going to start working with them.
They declared that they have now 50 dark stores? Is that okay?
Yeah, but I
Interesting.
think
Very
no, I
interesting.
agree. I completely agree. I think see that's where the market is moving. But the thing with running a company in public is that your appetite for losses or burn becomes a lot lower, right? So people will always keep an eye on the bottom line. So usko balance karna. The 50 cannot become 500 in 3 months, which is what Sahil would have been able to do had he been a private company with 5,000 crores in cash. That's what he would have done without even thinking twice. But abhi thoda wo, I think they will have to balance the
Yeah, but I
narrative.
think with 50, as I'm saying, unless VCs really wake up to this opportunity and fund 2 or 3 folks, I think he'll have the time to make 50, 100 and he'll still be the leader, if you ask me. Because everybody else is capital constrained. Like the largest amount of funding I have seen one of these startups receive is $5 million, which is, I think, a lot, but they've just started. So I don't know how fast they'll be
It's an
able to ramp
asset
up.
heavy business. Yeah.
Yeah. So
Huge opportunity for some of these some of these I think whenever the next generation of startups happens na, it's a good opportunity for like employees of Delivery or Ecom Express to kind of leave and start these companies because they have the bearing and the understanding, but they'll also know how to kind of make it better. I did not know, for example, that ON and all of these like on the shoe brand is all Nike, ex Nike guys. Hoka is also ex Nike guys. I don't know that. I found out today. I was like, wow, that's interesting. It's like, yeah.
मैं भी ex Bombay Shaving Company guy हूँ.
yeah, so actually, I just realized this is the Bombay Shaving Company mafia.
Oh, yeah.
So one of the things that we were very intrigued by was WeWork filing for an IPO, and I'm sure everybody has followed the journals of WeWork in the US. What happened to that model? What exactly went wrong? It went bankrupt, and suddenly you have WeWork India, which is saying that it could go IPO at above $1 billion, maybe at $2 billion. So that really piqued our interest. That clearly there's something happening in India that has not played out in any other market. And if you actually give it a little bit thought, you just realize that it's not just WeWork, but there are other large companies in the same space who have also filed for a DRHP, which is SmartWorks and IndiCube, which are also co-working spaces. And we had AWFIS, which is a co-working space provider, also going IPO about 6 months back. So suddenly you have, an entire space where all the companies or largest companies are going into IPO and listing within a period of 1 year. So what exactly happened? And that sort of led us down to a rabbit hole to really understand this space. We can get into the numbers later. I mean, I have a chart of presenting how the numbers of all of these four stack up. But I think it's important to understand what exactly has happened in the last 4 years. Predominantly in India, by the way. So the first thing that has happened is since 2020, there's been a very secular change in the entire market dynamics. All the corporates, whether it's an SMB, a startup, a large corporate, or enterprise, everybody has sort of moved and adopted co-working like never before. And what has led to that secular change is even more interesting. You know what demonetization was, let's say, for digital payments, or what COVID was to co-working. When I'm sure all of us remember that when we had COVID, there was a mass exodus for fixed spaces because everybody gave up their fixed assets and large offices because no one knew when they'll come back. And there was no point trying to play a lot of lease rental, right? But the return to work was gradual. I mean, there was first wave, second wave, third wave. There was a lot of turmoil on should there be hybrid, should it be a distributed system? And all of this, while it was becoming a reality, people realized that instead of taking up 10,000 seat offices, we should figure out a way to gradually get everyone to office. And therefore, suddenly the need for, let's say, 200 seaters and multiple 200 seaters in different locations started going up. As people were resisting, should we come back to office or not, corporates had to figure out how do we get offices closer to workspaces. So there were multiple different small offices and co-working fit into that very beautifully. The other analogy to think about here is that is co-working actually cheap? And the answer is actually no. It's almost the same cost as a fixed office. But then why are people still moving to co-working? It's not just the convenience. There was convenience of getting workforce to office in a hybrid or a distributed environment. There was another convenience, which was your need of capex came down. Like most large offices would have data servers, a lot of physical space for network and data servers. And it's not that cloud is cheap, but people just realize that it is very much more convenient to manage these servers on cloud versus a physical infrastructure. And that's the same thing that's happening in co-working versus fixed office spaces. And the data that at least we have is crazy. In the Indian real estate market is about 1 billion square feet. Flex spaces, that's the word that we use for co-working market. Flex spaces was less than 1% in 2010. Flex spaces was less than 5% in 2020, this is before COVID hit. So a market that was 5% in 2020 has now gone to close to 9 to 10% in 2025. So almost 10% of the Indian real estate market, which is about 1 billion square feet, is now flex spaces. And what is more interesting is it's expected to be almost 20% of the market in the next 5 years. So it's just a crazy shift that has happened in India. And the first question that comes to mind is, why is this not happening elsewhere? And the answer is very simple. If you go back to WeWork US versus WeWork India, what's changed is in the US, return to office has still not happened. It's much, much slower. The resistance to come to office is much higher there. And while the recovery has happened, it's just happened too late. And by that time, the company was bankrupt. Now, that's one example, but there are some small other companies in co-working as well. It's not just a case of WeWork. Overall, commercial real estate is in a bad shape in the US and Western markets, whereas commercial real estate in India is on fire because the need is very different. For example, as a data point, it's very crazy, right? New York itself as a city has 70 million square feet vacant right now with no takers. Just because most corporates have still not managed to get people back. Or there's another interesting happening where they are shrinking the workforce. So if you go back to COVID, where the workforce increased a lot for most companies, they have actually shrank the workforce significantly. In fact, most of the technology companies are expected to be below their pre-COVID workforce this year. With the adoption of AI in the US, I think this is the workforce shrinkage is becoming quite a reality. So I think all of these sort of point to a very unique situation for India where we are growing as a market. There is significant need for commercial real estate. But now that people have tasted convenience, most people who resisted doing flex workspaces have now tasted it. It's almost like quick commerce. You've tried it and you liked it, so you just want to repeat it again and again. And that taste has left them with a good NPS, and therefore they're just expanding their need for flex workplaces, which is what has now led to all of these companies doing very, very well in the last 4 to 5 years. It was not that WeWork India was not a great company before. It's just that their revenue has expanded significantly in the last 5 years. Same for SmartWorks, same for IndiCube, same for AWFIS. And AWFIS actually gave their results, quarterly results also yesterday at quite decent results. Growth is on track. EBITDA increase continues to be well. So clearly it looks like even 2025 is going to be a great year for flex workspaces. How long it continues, we don't know. But at least this year, expect all three companies, which is WeWork India, IndiCube, and SmartWorks, all to get listed as well. And that's going to be an interesting space. Once you have 4 listed companies, I think it's going to be a real coming of age for this market.
I love such markets.
It's probably going to be the fastest key एक sector 2022 में, suddenly started to emerge post-COVID, and then all like large players getting listed. It should be fastest in terms of that journey. But why is it that all 4 companies want to get listed? Is it just that they're getting high multiples, or they're of course at a good decent scale?
I mean, I would not have the view on all 4 of them, but my understanding is that this is again a capex heavy business.
पैसा भी चाहिए इसमें.
पैसा भी चाहिए. Most of them are private equity. AWFIS was venture backed and then private equity backed. Investors' ultimate returns only come in when the companies list. So it's not surprising that all of them want to list out, because in the end, यहाँ पे raw material थोड़ा capital तो लगेगा ही as expansion goes. There is another interesting aspect that at least is my read, and I may be incorrect on this. We seem to be in a massive bull cycle for this. So maybe this is the best time to sort of generate liquidity in that case. And I'll tell you why I sort of sense this, because this is a risky business. What happened to WeWork in the US, I know there was some mismanagement, but there is no reason why that can't happen in India as well. Let me give you a perspective. If you look at the numbers of all 4 players, maybe I can share the screen.
I'm also reading some commentary on this while you are.
Yeah, no, sure. So if you look at, and I just took publicly available information. This is an occupancy game, right? You need to make sure that you break even on every center. So just to give you an example, there are 2 models in leasing. There is a straight lease that I will take up a full lease, मैं पूरा जगह ले लूँगा, and I will do it up into a fancy center, and then I will sell different seats, right? So I may take a 500-seater center and I may sell it to one, let's say Amazon, or I will give it I'll give 100 seats to Shantanu at Bombay Shaving Company, 100 seats to Chirag at GoKwik, 100 to Revant at Mosaic, and sort of fill the seats that way. That's a straight lease, which effectively is higher risk because it's very difficult to sell the seats that you don't have yet. So you need to lock in a space knowing that I'll be able to sell seats here and then get to certain occupancy. Now, the occupancy needed for a center to break even usually is 60 to 65%. Before that, you are actually losing money, right? And but if you get to like 90-95% plus occupancy, your EBITDAs for per center can be as high as 30-35%. There is another system, which is a partner lease where I know, let's say Shantanu is a big landlord. I'll tell Shantanu कि यार तेरे पास ये बहुत जगह है 10,000 square feet वाली. I will develop this space. I will make it into a fancy office. I will utilize the parkings and I will sublease it to Amazon or Nykaa. And we will do, but capex तू करेगा. फैंसी ऑफिस मैं बनाऊंगा, मैनेज मैं करूंगा, बट केपेक्स तेरा होगा. लाइक ऑफिस बनाने का 10 करोड़ का खर्चा है, वो शांतनु तू कर, एंड आई विल डू अ रेवेन्यू शेयरिंग और अ प्रॉफिट शेयरिंग विथ यू. Now the advantage of this is that suddenly you don't have a lot of assets on your books or you are a lower capex cycle business. But it also limits your EBITDA. So your partner lease EBITDA per center can be 20 max 22%. So you have lower EBITDA because you're sharing a lot of the revenue or profits with your partner who's put in the capex. But the occupancy required under this revenue partner sharing is like 30% to be a break even हो जाओ क्योंकि आपका capex नहीं है. Now the reason the only person who plays the partner lease program is actually AWFIs. They are the only ones who have, they do straight lease also, but they do a lot of partner lease. So they are a low risk, I would not say low reward because just EBITDA is not the only metric. There's also ROCE, and ROCE return on capital employed is, you also need to calculate the amount of working capital required or the amount of capex required to get that return. So ROCEs actually seem similar for all businesses. While EBITDA may be lower for a partner lease, the ROCE is actually similar. So what it looks like is AWFI has taken a low risk, low reward model, and the other three are all on the high risk, high reward. Right?
And that's the reason, you are saying that because they get partial revenue, that's why there is this huge difference in seat revenue. Let's say AWFI is $3,800 seat revenue and they are at 11,000 rupees. Or maybe 5,500 to 40,000.
Correct. So there are two aspects here. One is not just. One is that there are three different segments that everybody plays in. There is a super premium, the premium, and the value. So we have to understand that WeWork plays in the super premium segment. Right?
My sense is that's the long tail segment, as I would like to put it. Like these are the freelancers, these are the influencers, creators who are like, जिनको एक-एक दो-दो seats चाहिए. Right? They would.
No, you also actually have the opposite. The opposite also it holds true where the Amazon will say कि यार we are Amazon, we can't, I mean we will take 1,000 seats in a WeWork. So it's a super premium offering. Then there is a premium offering and there is a value offering. So AWFI has actually started with the value offering. So they realized that we should give value because this is where it was one notch above Innovate. I don't know if you remember there was this co-working space called Innovate that I think Oyo had bought. I don't know what happened to it. AWFI started with value. Then they took a new format which is Office Gold, which is premium, which is little bit like SmartWorks and IndiQ. And they also have a super premium offering like WeWork called Elite. So they play all the categories, but most of their seats are in value. That is one. And added on to that, because they also do partner lease and which is revenue share, their seat revenue looks lower.
Right? And I can imagine 8,000 rupees सस्ते की सीट तो कभी भी AWFIs नहीं बेच रहा. Right? Unless you are doing like a very large bulk deal.
Yeah.
So 8,000 नहीं दे रहा तो 55, so at least there is a good 25-30% share, which is.
So one aspect, if you're looking at row number 10, that's seat revenue in INR million. So it's 550 crores. It's not per seat cost.
Oh, is it? I was.
Yeah. It's sorry. मेरे को लगा ही तू थोड़ा सा. It's seat revenue in INR million.
Okay then.
Yeah. So the point to look at is seat revenue per square feet. That is the real actual unifying index to look at. And this is interesting where the seat revenue per square feet for AWFIs, which plays largely in value, is actually still higher than an IndiCube that maybe plays a little bit premium. So I'll tell you what happens here. And I was talking to a few of the mutual fund guys. Their interpretation is that anybody who does a capex model is in desperation to increase occupancy levels because you lose money till you get occupancy, and therefore you are under pressure. You are under pressure to sell the first 60% as fast as possible.
You negotiate poorly, basically.
I mean, that's a harsh word. I think you negotiate with the pressure of me having to get to 60% occupancy ASAP because the clock starts once you're, right? Whereas AWFIS with the partner leases doesn't have that pressure to sell at any cost because they are like, boss, break even हो गया, अब इसके ऊपर मक्खन बनाना है ना अगर, तो आराम से बनाते हैं. And it's more aligned with the partner because the partner also is like, मैंने इतना capex that I need to earn more money. And the highest seat cost, if you see seat revenue per square feet, is WeWork because it's the super premium segment.
Yeah.
I have one data which is also, we were discussing the revenue per seat. So revenue per seat for WeWork is 1.8 lakh rupees annual. And for AWFIs is it 70 lakhs. So 70,000.7 lakhs. 70,000 per annum. I'm assuming some part of that is because of sharing. And then of course they do more value.
So 5,000 rupees versus 15,000 rupees a month. Clear hai wo.
Yeah.
Interesting.
Yeah.
Very similar. I think if you see the metrics, that's very similar to hospitality. There are two things, right? One is ROCE becomes like the gold North Star metric. If you look at we look at Mr. Chatwal at Taj or Kapil at Oberoi or whatever, like these guys are just ROCE, right? They don't look at anything else. Second is it becomes a very interesting execution game because ROCE becomes so important. Like a lemon tree can play this game so much differently, and if they're able to play the occupancy game right, and there is no winner take all market. Unlike some of the other categories that have blown up, here it will not be a winner take all. It will be everyone catches their positioning and then executes and then maximize the ROCE. So then that's the game all of these companies will probably be playing. And what is the structure, Revant, of WeWork India? I remember WeWork India. I remember like some VC was saying they were wanting to buy it or invest in it. I think Embassy Group is involved. What is the structure?
So it was a JV between WeWork. It was a JV between WeWork US and Embassy Group in India. It was, I think, a 51-49. I don't remember who had how much. And because WeWork went bankrupt, I think the Embassy Group figured out a way to buy back and own more. And I think there are now some private capital also involved in at least making sure that they could buy out the WeWork US shares.
So it's fully owned by India, is it now? WeWork India is an India company.
Yeah.
That's really cool.
That is interesting that they chose to keep the name because I think the brand is still quite premium and goes with they're able to command at super premium rates, and at least they have the same setup still of how WeWork always was.
Yeah, I'm also like intrigued.
Innovation कहीं पर भी हो जाए, India business model figure out कर लेता है. या इंडिया में बना लो तो फिर कहीं पे बना सकते हो, यूएस में बना लो तो जरूरी नहीं है सब जगह चल जाएगा.
What's happening on health? तुमने वूप कब ले लिया शांतनु?
बर्थडे में मिला.
अभी I think एक कॉमन ग्रुप पे
नहीं आ रही हो तो वूप ले लो.
No, but I love it. I think how many calories a day do you guys burn? Like Whoop is telling me I burned 2,800 calories yesterday and 2,900 the day before. It's very high.
Don't take it too seriously. Even the steps, don't take it too seriously. Steps, so at least they say it is in beta. But calories also, I think it's some. They have cited some paper in how the formula which they calculate, but it looks to me to be off.
My resting heart rate is across my Garmin, Gabit, and Whoop same, literally the same. So that I think they figured out. That they figured out.
Interesting. Weirdly, my calories actually never fluctuate more than 100. It's almost like if I look at my 45-day average since I've got it, it's exactly 2,000. जो बोलते सबका 2000 होता है. Like it's almost like my body figures out a way कि भाई कल बहुत फटली थी तो आज 1700 ही करो करके. I don't know what happens.
नहीं, I think you are right कि ऐसा नहीं है कि बहुत ज़्यादा fluctuation है. But let's say for me it shows 2,400 calories, which looks like we are not, let's say even on the days where I'm not running, not doing exercise, it will show 2,700 calories. But so वो थोड़ा odd लगता है मुझे. Similarly for my wife, it shows some in steps it shows that she does 20,000 steps. Which is impossible. I have seen her on Sundays also. She's sitting with me और उसके 10,000 स्टेप हो गए. मैंने बोला यार हम तो साथ में बैठे, मेरे 2,000 में उसके 10,000 हो गए. तो वो दोनों मेट्रिक आई थिंक थोड़े ऑफ है.
So what do you like? Sleep is one. What else do you guys look at?
I think largely sleep ही है. My view is largely sleep. हाँ, ये 3 पे ही वो focus करते हैं कि strain your body and sleep well and recover. So like even within sleep, in more than efficiency, you just focus on the restorative sleep percentage. As long as that is going up, that is the most important thing. So and
By the
maybe
way,
if you can
I
get it up.
didn't, to test magnesium, I didn't take it yesterday. And I had probably the lowest 7-day restorative sleep in the last 7 days. Clearly works. And recovery was still very high. So I had 90% plus recovery. So clearly magnesium works from a deep sleep point of view. एक और उसमें interesting feature है, if you click on the sleep and you click on deep, it shows you when, actually Brian Johnson had put this out that how much time does it take you to get your first dosage of deep sleep? It shouldn't be like 3 hours into the sleep. So that's also interesting one. I typically get it in like first 1 hour.
बढ़िया.
So apparently Brian Johnson has been saying that he gets it in like 30 minutes or so, something like that.
मेरा तो बहुत लेट है यार, प्रॉब्लम है तो.
नहीं यार, एक और मत ले, अभी रुक जा. This is the problem with numbers.
sorry.
We'll figure out these beautiful things. पहले
but,
रिकवरी वाला अपना सॉर्ट कर ले, वही बहुत है.
रिकवर सॉल्व करता हूँ मैं. हाँ, बट
पहले वही सॉल्व कर ले हम लोग.
to your point on you know, like a lot of people ask me that यार magnesium addictive तो नहीं होगा, जैसे melatonin होता है, melatonin के बिना फिर नींद नहीं आती है. So I think because once you solve the deficiency, you don't need it every day. वैसे तूने कल नहीं लिया.
It's actually not a drug to sleep. I'm able to sleep, you know, without that also. I think
That's
it
what
promotes deep sleep. It
Correct.
relaxes you more.
Correct. So I think the functionality is very, very clear about, you know, relaxing your body and then actually helping you do more deep sleep. Also for people who have generally trouble sleeping, it does help, but main critical वही है, एक बार your body जो deficiency कम हो गई है, एक बार वो ठीक हो जाती है, उसके बाद तो then you are बढ़िया, you know, setup हो ही जाता है figure out करना. So I don't know if you're still taking it, Shantanu. Magnesium ले रहे
Every day, without fail.
I saw 59% वैसे तेरा restorative sleep percentage. That's crazy यार. It's very high.
59.
Boss बहुत ज़्यादा है.
You can tweet to Brian Johnson, boss. मैं तेरे से इसमें ऊपर हूँ.
Work किया मुझे 62%. 59% तो average.
Restorative sleep.
So when you do that, restorative sleep, so Shantanu, can you please send this to me? Because you should also tweet to Brian Johnson saying कि मैं Man Matters magnesium कमी खा के फिर 62% पहुँचा हूँ. तेरा blue supplement नहीं चलता है. यहाँ पे और भी लोग हैं जो अच्छा बना रहे हैं करके. But it's crazy, it's very high. It's very high.
Very high.
Barely
मेरा लाइफ टाइम में नहीं होगा 59 मेरे ख्याल से.
मेरा 51 बेस्ट गया अभी तक. But
मेरा
this is
59
something
दिख रहा है.
Chirag also told me वैसे Shantanu. So Chirag Chadda, when he started taking the magnesium gummies, he showed me data on Whoop where his restorative sleep percentage went from 40 to mid 50s. So this is the main advantage of that relaxing the body with magnesium. बहुत फर्क पड़ जाता है.
I think it's literally, and there it is so easy to have. It is so tasty. It is low on calories. The form factor is good. बढ़िया चीज है यार, बहुत बढ़िया चीज है.
बनाते ऐसे कुछ थोड़ा.
अब मैं सुपर ब्लेंड भी रोज पी रहा हूँ, बाय द वे.
थैंक यू सर.
तो सुपर ब्लेंड भी पी रहा हूँ ठंडे पानी में डाल के. सीटी अपन ने नहीं किया ना, वर्कआउट के बाद मैंने रखा था वो बाहर सुपर ब्लेंड करने के, लेकिन आप व्यूअर इन हरी टू लीव
है. उसके बाद घर पे भी है उसके. तो स्ट्रॉबेरी वाला पीता है ना.
वर्कआउट एंड ब्रेकफास्ट वाला डेट था यार सीटी और मेरा, उसमें सुपर ब्लेंड वाज रेवंस कंट्रीब्यूशन. without his presence, how do we complete the date without Revant? नहीं, बट इट्स यार टेस्ट भी सही है उसमें और हेवी भी नहीं फील होता उसमें, पता है सुपर ब्लेंड से.
आइसोलेट है ना, दैट्स व्हाई इट्स नॉट हेवी. प्लस फाइबर भी है ना उसमें. लाइक इट्स देयर इज अ लॉट ऑफ फाइबर एंड लार्जली आइसोलेट इज वेरी लाइट ऑन द स्टमक, सो दैट हेल्प्स. बट यार अभी प्रॉब्लम हो रहा है. द कॉस्ट ऑफ प्रोटीन, द रॉ मटेरियल कॉस्ट इटसेल्फ इज बहुत महंगा हो गया.
व्हाट इज द रॉ मटेरियल? इसमें रॉ मटेरियल क्या है?
So everything is the raw material. Let's say vitamins hai, fiber hai, etc. But the most expensive item in that is protein. Most expensive item in any macronutrient is protein, right?
But what when you say protein, what do you buy? क्या खरीदते हो आप इसके लिए?
You buy the isolate powder, right? Whey isolate. So whey में there are different types, right? There is whey concentrate, there is whey isolate. Whey isolate is basically triple filtered. You remove all the carb and all the lactose, so it's like almost pure protein, right? 99% lactose free होता है. Sorry?
From what do you remove this?
No. So let's say तेरा दूध से चीज से प्रोसेस करके skim milk powder. There are different kinds of, and you keep filtering it. You keep removing the carb and you keep removing the lactose to get a higher and higher, more pure version of protein where everything else is removed, right? So whey concentrate was the most popular form because it was 90% lactose free, but too many people had bloating issues because जो 10% lactose था या थोड़े कार्ब थे, लोग दो स्कूप ले रहे थे, तो it was just a little heavy on the gut. So then whey isolate is a offering that people like, but the problem is it's 2x the price. So the super blend in whey concentrate, there's a version of whey concentrate also, it's half the price of this. So if your gut can take it, you can take that one. In fact, I would recommend if you don't have that कि अच्छा light ही feel करना है, you can take one because सस्ता पड़ जाएगा. Because the concentration of protein doesn't change. It's just that and even the amino acid profile doesn't change. Everything else is great. And of course, you have the fiber, you have the multivitamins, you have everything else as is in the super blend. It's just that as you change the quality of protein, बहुत कुछ तेरा gut feel जो है ना वो पूरा change हो जाता है. Like plant protein, for example, is also light on the gut but feels heavier because तुम ऐसा लगता है बहुत खाया करके तुमने. तो सबका ये pros and cons हैं, and unfortunately it's all a price comfort equation. Like in fact there is a clear way that we have, which is like देखो लगेगा पानी पी रहा है, इतना light है, but it's even more expensive.
Oh wow! And who does this process? Like, are these companies who do it? Like, who are these manufacturers?
But that's the problem. The real high quality manufacturers जो है ना वो इंडिया में कोई है ही नहीं. So this is all imported from Europe. So the biggest. Sorry.
क्यों नहीं इंडिया में?
यार, I don't know how much of, like, for example, I think Amul is doing it for themselves. I don't think Amul is doing it for selling it to others. Like, if you see Amul का जो protein, Amul has done whey. So Amul is figuring out कि यार मैं अपना captive requirement कैसे complete करूँ. But basically there are two separate things. One is dairy and then there is how much should we put in whey. So I don't know why, but India में नहीं है whey manufacture. Like basically extracting and then manufacturing के नहीं है, सारी importers ही है.
ये आपने करना चाहिए यार.
भाई उसके लिए गाय भैंस का बड़ा वो होना पड़ेगा तुमको. मतलब you can't just say कि मैं दूध procure करके बना दूंगा करके. This is a proper large capex manufacturing process. This is not something that
if ever there was a mandate for a Gujju boy to take and do, it would be to
and actually checked with Samir once.
High grocery business.
हाँ,
correct. No, but actually can you check with Samir once कि अगर वो around 400-500 टन प्रोटीन बेच रहा है महीने का, 500 टन प्रोटीन में तो यार, like why is he still importing it? Because there is a material risk to this, right? कि बहुत importer भी 2-3 ही अच्छे. It's a very concentrated like it's almost like a cartel. तो यहाँ मेरे को problem दिखता है ये.
Like blades, for example, razor blade का same issue है. It's tough to make the damn thing, so which is how to import. Get somebody to make it yourself. My view is if this is going to be so important, the market is large and manufacturing is the moat, which we are seeing with a lot of things. I think players like you and Samir and you guys should.
I'm nobody in this space, भाई. मतलब Samir is the OG. He 500 टन करते हैं. If he hasn't figured it out, actually पूछता हूँ मैं, फिर पता करता हूँ क्यों नहीं कर रहे क्यों. This 500 tons is crazy यार.
ये raw material दूध ही है, तो फिर उसके बाद अगर processing वाला है तो it must be capex यार. और technology, मतलब patent technology.
Both I think. करते हैं next time के लिए वो figure. We should do research and come for next time. But तब तक आप magnesium खाओ, आप 60. I'm jealous यार, fucking 60% restorative sleep.
60% is insane, Shantanu.
Actually बता रहा हूँ मैं, tweet कर दे ब्रायन जॉनसन को.
नहीं यार,
अरे screenshot भेज दे बस कि ब्रायन, thank you for visiting India, your contribution to my life, and ऐसे डाल दे आप.
और ये भी लिख दो मैं जहाँ रहता हूँ वहाँ AQI 300 है. I don't know causation, correlation, but something seems to be working.
और inverse causation. नशे लेके restorative sleep.
Super guys.
PM 2.5. Brilliant, yaar. Thank you so much. And Revant, to your point, I like views and all are aside. For me, I love to come and learn from the both of you. And this is I think you barbershop episodes, asymmetric episodes, to keep friendship alive, recent with close people. Perfect investment of time here.
Thank you, dost. Thank you.
बढ़िया.
चलो, see you guys.
See you guys. Thank you.
Okay, bye.
Bye.